Okay, let's move into our second topic, Patrick, and we're going to talk about inflation numbers. But you just said the words, and I just heard them. You said the words Tiff Macklem, the Bank of Canada, the governor of the Bank of Canada. And I think I'm going to start calling him the genius. Tiff the genius. Tiff the genius. How do I want to just get your reaction to Tiff the genius, who clearly got inflation under control, Patrick, because inflation numbers are ticking down again. The report just came out, and we're going to dig into inflation quite a bit here in this episode. But inflation came down again. I think it went from 5.2% to, I forget the exact number now. It's under.
4.8.
It's low 4.4.
Why are you mad?
No,
Yeah,
4.8.
no, 4.4. I have it right here. 4.4 in March,
Okay.
down from 5.2 in February. Tiff the genius at it again, Patrick.
Well, he's got one fan. You just do that to piss me off, and you're doing a good job. So let's be really clear about it. I don't think for one moment that interest rates had a really profound effect on inflation. I didn't think from the start. I guess what it did was, it would slow down housing for a heartbeat. But at the end of the day, there is one fundamental that we have to keep coming back to in the world of inflation. Number one, supply chains opened up, and all of a sudden supply was back on the market. That helped to bring costs down. We also saw energy costs drop. I keep going back to that, and I talk about it on and on and on. And I just can't stop beating that drum, because when we look at energy costs,
you kind of do sound like a broken record, just so you know.
I know, but I don't know where to go with it. People want to make it more complicated than that, and I don't think it is. And I realize that there's all sorts of nuances involved with it, and I get all that. But when you look at even the wage pressure, there isn't a ton of astronomical wage pressure happening in the country, other than from our now public service workers. Don't even get me going on that. But let's put it this way. When we look at inflation coming down, we saw fuel prices or energy prices coming down. That's what drove most of the decrease. Had nothing to do, in my world, with interest rates. Although, when we look at inflation, here's what does start to happen: is demand at certain levels, certain demographics starts to come off, because of course they don't have the disposable income. That seems to slow things down. But food prices, they're talking about food prices being down. I don't know if you want to show that particular graph, JG, but just give me a minute to just talk about that CPI basket of goods. The government is notorious for changing that basket of goods. Beef prices came down. Well, okay. 3 months ago, you were comparing beef prices of, porterhouse or ribeye, and now you've got hamburger in there, but it's all beef. And I'm not saying they did it in this particular case, but that basket of goods is always changing, always shifting. And unless you're following it closely, you're not seeing those changes. I don't follow it that close, but I just know that those changes are often happening, and we're not aware of it as the consumer.
Well, I'll let me expand on that, Patrick, because I do think it's very important, which is the graph you're talking about here. I'll put it up on the screen, which is awesome. And that is, this is the contribution to changes in Canada's inflation rate. What this means is this is how inflation is coming down. Energy has had the biggest impact, 5.2 per just over 5.2% of the inflation is energy. And because it's come down so dramatically, as you've talked about, Patrick, that's had a big impact on inflation. Owned accommodations has also come down. Food and groceries has also come down. Upholstered furniture also come down. Wooden furniture also come down. And everything else has also come down a little bit. And those are the percentages of that they make up of the CPI, which is a basket of goods. So it's a great chart, because you're absolutely right, Patrick. And Tiff the genius, and we'll get back to Tiff the genius here in just a second, but it is a good chart. You are absolutely right. Energy has had a big play in it. Supply chains have had a massive play in it. But I will talk about this shifting basket of goods. The fact is that the average investor needs to understand that there are a ton, and I don't know the exact number, but there are many, 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 and I'm talking about probably a dozen or more baskets of goods that they measure in terms of CPI. And sometimes they exclude mortgages, and sometimes they exclude energy, and sometimes they exclude food and variety of things. They measure a ton of this stuff. It's not the Statistics Canada, Patrick, changes from my perspective. It's not that they change what's in the baskets. It's that the media chooses the basket that they want to fit their narrative they're trying to push. And that's what the average investor is reading. The average investor is not going to Statistics Canada and reading the actual definition and actually reading what's in the baskets. It's the media that manipulates the narrative based on what they want to say. That's the problem, in my opinion.
Yeah, and the point of it all is that it's a very hard number to kind of put your finger on and dial it in so that you really understand it. It is a moving target. They reclassify goods. To your point, what is the media choosing to shine a light on? At the end of the day, we all are going to buy food. We're all buying fuel. As much as fuel prices have come down, listen, I paid $1.98 here in BC for a liter of regular fuel, by the way, not premium. And so when you come to certain provinces and you look at it and go, we joke about BC is bring cash. I can tell you, for example, I'll give you a real live, is that my vehicle insurance cost here is 40% more than in Alberta. Make sense of any of that. So we look at CPI, we look at inflation, and the reality of it is we're going into a store, we're paying more for a coffee, more for insurance, more for gas. So whatever they're selling us here, whatever deal they're pitching, to me, the reality of it is you feel it when you're going into the store. And of course, what we could talk about is, how about taxflation? We don't shine a light enough on taxflation and the fact that our carbon tax came into effect on April 1st and everything went up and we are being taxed to the max. So that's the term I'm using, taxflation, and I think we need to include that as well. So there.
You heard it here first, folks. Taxflation, that's a new thing. I mean, this is going to take over. But Patrick, back to CPI for a second. There are, like Scotiabank, for example, is predicting that we're going to be sub 3% inflation by the end of this year. And you have very appropriately said, so does the Bank of Canada. They also clearly are thinking this. That's why they've held rates for the last couple meetings. And we expect this to continue. And we'll see where it goes.
We'll see where it goes. Let's, for those of you who are listening, going, where are interest rates going? Right now, the way, bond yields, we don't see rates. I don't see rates going up. That's for sure. Will they come down? It's anybody's guess, but I just don't see them going up at this point. There's nothing indicating they will. Many are actually, it's already built into the bond market that they're going to come down. So we'll see.
Inflation covered.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.